Good evening, viewers. Welcome to episode 16th. It's August 9th, and we are at episode 16 of COVIDCASTJA. Today, as you see, we are going to be continuing our very lively debate on lending in an uncertain environment. So this week is part 2, and this week we're going to be looking at some real case studies. For those of you who did not join last week and you have not received your SME memo, please remember, email us at sme@psoj.org. sme@psoj.org, and we will add you to our mailing list so that every week you can receive our memo. For those of you who received the memo last week, we're continuing our discussions based on the things that were set out in that memo. In addition, just to remind you, the COVID Relief Fund is still very much alive, as it is coordinated by the PSOJ, and we're encouraging you to donate to the COVID Relief Fund because we are standing for Jamaica. So donate at charity.gofundme.com /stand for Jamaica. So you may be wondering, what is this week? What is this week's episode all about? Remember last week we talked about how evident it is that we're in some seriously uncertain economic times. It's times when things are ebbing and flowing in an almost stop-start economy. We've been seeing what has been happening all over the world. We've seen where in Florida had opened up and it's having to close back several businesses. Now, we have businesses in Jamaica that are now contemplating reopening or have reopened, and many of them are looking at their current financial positions and what is available. So today we continue the conversation on lending in these uncertain times, and we're going to be joined now by a very familiar face. We're going to call him Dr. SME, our very own Nevada Poe, who is the lead architect for the PSOJ Access to Finance project. Nevada set out some key points for us to note last week, and he's continuing that discussion and just giving us a quick reminder of some of the things that need to be considered. Nevada, how you do? Welcome.
Very good. Actually, I got some good news today from two small businesses, which I did not see would necessarily have done well in the time, but they did well during the even during the lockdown. One was a hardware store, and apparently how it was described to me was that people being at home every day and them see the thing that should, you know, when you don't see it all the time, the thing that have to fix, but you at home you see that doesn't know you. So a whole heap of fix it thing happened during the
I probably brought something from him too.
Yes. So hardware did very well, and the people who had to set up supply home offices, so computers and printers and that sort of thing, also did well during the lockdown. So it's not only doom and gloom. There's certainly things that are pivoting and actually moving upwards. So that was some good news that I got today, that of two sectors that had done very well. But you know, so good and bad, up and down, all over the place. Excellent. But very good to be back to continue the discussion. The whole idea of doing a case study now is to make the theory of what we talked about last week more active and more alive. So we're bringing together SMEs, small and medium businesses, and bankers to talk about the situation that they're in and talk if there are solutions. Again, it's not about promises, it's not about things, but just have an open discussion. And one can imagine, for example, this would be a conversation that an SME would actually have with a live banker. So we want to encourage more and more of these conversations. That's why we're happy to have GMB and NCB on board to be our guinea pigs in the discussion, and happy to have Ribcage and Jamaica Restaurant or Ribcage and Jamaica Inn on board to also have to watch the SME and the banker play out. So looking forward to that. Want to just give again some context if I can. Again, the slides. First slide. Okay, where are we? Situation assessment. MSMEs are significant contributors to the economy. And this is something that we know. They're 70 to 80% of employment and somewhere between 50 to 60% of our GDP. So this is no small fry. They're small, but they are hugely important to Jamaica. They're faced with particular great challenges because of the pandemic. They're vulnerable due to systemic shocks. We're going to have negative growth for at least for part of this year, possibly into next, and that is going to affect them very greatly. And they lack the resilience to survive near term. Not many of them are sitting on cash to last 6 months, 3 months, etc., etc. So that sector, which is important, is at risk. We are most concerned with 3 types of situations. A business that was viable before and would be viable after COVID, but not necessarily in the interim. So the 2-year cycle where the business stop, start, they may not survive that unless they get some kind of support. But they were very good before and very good afterwards. And Jamaica in tonight may be one example of that kind of thing that we'll be talking about. The second thing that we have is viable, but not visible. We know a large portion of our SMEs, in fact, most of our SMEs are not registered and compliant, but many of them have been in business for many years, providing economic activity for the country, as well as employing people. So we have to make sure that they survive also, even though they may not immediately come forward because they feel like many of the things that are being asked of them now, they didn't have because they didn't register. So it's very important that we shouldn't punish them. We need to grandfather them into becoming visible. Then the third group that we're concerned about is what we call viable, but being sunk by delayed and non-payment of receivables, potentially from the government, potentially from the private sector. I have a lot of small business complaining now about the fact that they're not getting paid, and even from some big companies and so on, because again, it's not the big companies are also in trouble, but really crucial to recognize that if the small companies don't get receivables, they're out of business. So thinking those 3 areas are really, really critical for us. Okay. Here, so again, just remind from last week, right? First, the solution horizon. We've got to be talking about 2 years. We won't have a viable vaccine for about 2 years. So we're going to be in a stop-start situation. We just have to accept that and plan accordingly. Scenario planning, which means, yes, I've opened, but I may close again. And that has to be the context in which all of these discussions get held. Level of support. Am I going to stay closed basically for 2 years and do basic maintenance? Or am I going to actually half open, but may need working capital because I can't be profitable until such time as I can be? All of that needs to play out. Credit adjudication. We talk about this is the whole idea of whether or not you get approved for a loan. And we believe that at this particular point, character and capability, meaning does the guy hustle, does the woman hustle, and has they pivoted their business, will be worth far more than any business situation. Business situations are going to change. A hustler, a guy who can change with the time, is going to be far more valuable for credit adjudication. 5, the past is not indicative of the future. Today we found out that Brooks Brothers, a hugely established brand from before me born, actually has closed. Right? So we are saying some big companies around the world may no longer be here. So even for our SMEs, the fact that you did well before COVID doesn't necessarily mean you'll be able to do well within COVID. Because of that, we're going to need very creative lending structures, maybe borrowing as a consortium, built-in moratoriums, and all the things that may be required to make a business get through this time. We'll also require the BOJ to figure out a way to help create the liquidity that's needed and have some rules around how these things will be identified and accounted for. Higher interest rates may be required, because certainly in the first year and a half, 18 to 24 months, you have erratic payments. The banks or financial institutions are going to have to be compensated for that. So that may be part of what we'll see. And the whole idea of having a banker SME partnership, the banker SME conversation about the business, crucial. And I hope that tonight both our bankers and our SMEs are watching to kind of see the kind of conversation that we should now be having with our bankers and the bankers should be having with the SMEs. So that's sort of setting the context. And I'm really looking forward to this show because case study is a wonderful way of learning.
So for our viewers, this week we are looking at lending in an uncertain environment, and this is part 2 of our discussion. So some of the feedback we would have received last week is when we talked about creative lending structures, what did we actually mean? What are some of the practical creative lending solutions? And people wanted to hear from real SMEs and also from the bankers. So what we have today is a case study environment. We're going to have 2 SMEs on. We are actually going to start with Mr. Kyle Mace, who is the general manager of Jamaica Inn, and a very experienced hotelier and businessman. And we will be joined by 2 bankers. So we are pleased to welcome this week a face that would be familiar to those of you who have been watching us every week, Miss Tanya Algrove. Tanya is the Assistant General Manager of SME Business for the Corporate, Commercial and Consumer Banking Division of the National Commercial Bank, NTB. She has spent the last 16 years in banking in senior roles, and prior to that, she spent 10 years in roles spanning financial advisory, insolvency management, corporate finance. In other words, Tanya is pretty experienced in what she does. We're also going to be joined by Derek Rajak. Hi, Derek. Hi, Kyle. Hi, Tanya. Thank you for joining us. Derek is the Group Chief Risk Officer for the JMMB Group. He has over 15 years of experience in the investment and banking sectors, having worked at senior managerial levels in market and credit risk. Derek also holds certified financial risk management professional qualifications. So we have 2 very experienced bankers. We have
Oh, did we lose Rochelle? Okay. All right. Let me just move right in. Kyle, welcome. Welcome to everybody. Tanya, Derek, thank you very much for joining. Kyle, I want us to actually start with the story of Jamaica Inn. Tell us about how long it's been around. How has business been? Describe the business to us just before COVID, and then move into what has happened since COVID.
Great to be with you, Nevada, and all our viewers out there. And welcome to Otarius. Yes, I'm general manager of the Jamaica Inn, a very iconic property here on the North Coast. We are an intimate property, so I'm coming to you tonight with the viewpoint of obviously a SME, a small enterprise. We are independent, so family owned, very much different to the chains and so on. And we make up a great part of the industry. So we often hear about the large all-inclusives and with their large marketing funds. But a very important part of the industry is represented by the smaller properties across the island.
How many rooms do you have, Kyle?
So we're 55 keys. So again, on the intimate side of the spectrum, I actually want to also mention that as a chairman of the small hotels and accommodations for the JHTA, I do speak on behalf of my members as well. So when I group us all together, when I talk about the plights that we have faced and are continuing to face. So 150 team members. So even though small on the number of room side, we still employ a substantial amount of persons. So it's a business that has been around since the 1950s, and owned by the still owned by the family. Our owners, the wife of our owners, Jamaican. Our major shareholder, he moved to Jamaica. He was brought to Jamaica when he was 2. So very much a Jamaican affair, a family affair. Without sounding too cliche, but our entire team member staff makeup is all Jamaican, which is we're very proud of. So yes, we're doing quite well in the beginning of 2020, the first quarter there through to March, and so it's no secret that after mid March, the tourism industry was decimated by the onset of COVID and the epidemic.
Sorry, can I just a quick question? Just another thing. Have you been doing well for a number of years, or was it just this year you're doing well, or have you been doing well for a number of years?
We've been a very and thankfully a very successful property. We are on the luxury side of the market, so that means that we don't get affected too severely by swings in the economic environment. Our clientele are usually a little bit more well-heeled. The good thing about them is that they're also spending quite a lot in the economy. We're EP hotel, so not all inclusive, and that's an important factor because our majority of our guests, though we have a wonderful restaurant and a number of restaurants, they do tend to go off property to enjoy the local restaurants and tours or excursions and sites and so on. So we are one of almost I hate to say it, not a dying breed, but we're certainly in the minority. But again, we tend to be similar to the majority of the smaller
understood
properties.
So what you say is Jamaica, not only for Jamaica Inn, but also your guests also spend money in the area for meals and so on. How many people do you employ currently?
53 team members, and when we had to close our doors in mid-March, we took the decision not to lay off our team members. At the time, there was a lot of uncertainty. There was a lot of unknowns. What was transpiring? There still is. I mean, that nobody can say that they have a clear vision or the crystal ball is that clear. But we decided we were going to maintain our team members, and so and then the first initial stage was our team members were required or asked to take vacation. So still meaning that they were on full salary, taking their vacations, and as an initial step, as we figured out what was going to happen in the future, we were again uncertain whether this the epidemic was how long it was going to affect us. The things that transpired during that period of time, and we realized and we saw the cancellations. We were having to refund a lot of deposits, which was a very sizable amount for most properties. So, as guests book, they leave a 3-day deposit. A lot of properties our size, we rely on using that to fund its cash flow, and so we can fund activities as we go along. So the closure of the airports hit and the entire industry. And it's no secret that the hospitality tourism industry was just decimated as of mid-March.
So, Kyle, question for you. As we look certainly towards what's happening in the US now, and we see the rising numbers, and the US is our main tourism market for the most part, and you look into your crystal ball or immediate crystal ball, right? How do you see your survival strategy in sort of the next year? How do you think about sort of how do you get through the next year with the possibility certainly of the airport reclosing, or maybe even reclosing to America, as other countries have certainly done that, or other things that are kind of anticipated? Again, the whole discussion is about managing in uncertainty. How do you think about it in the context of Jamaica Inn?
Yeah, so it is complex and again always changing. So when we heard the airports were eventually opening, there was a bit of naturally a bit of euphoria. So we were going to be able to hopefully welcome guests again. Jamaica was going to be able to welcome a few foreigners. The figures. I mean, tourism contributes 9.5% of GDP. So it was a move and debate whether it's the timing and so on and so forth. But we needed to get things going again. So we started to look forward to that. So there was a little bit of a light at the end of the tunnel. So we started gearing up. Most properties started gearing up towards hopefully receiving some guests. And in a few cases we had announced opening and we still haven't officially opening. But a lot of properties did, and just based on the appetite of the traveler, though, what we're seeing is that the demand is very slow, is very light.
Yes, of course.
Things are really just trickling in. It's very dependent on the number of airlines that are coming in, or flights, seats coming into the island. It's also dependent on the risk appetite of our visitors. So the situation with testing at the airport certainly worried a few folks. And that has changed. That has changed since over a month period. I know that we're pre-testing, and I want to say that I thought it was always one of the best case scenarios to protect our nationals and a great form of risk reduction. But what it meant was, and the reason that there was a change initially from that to another model, was that the airlines that said they weren't going to fly, they weren't going to come to Jamaica. So then you're stuck without having any business. I'm glad to see it's changed again, back to pre-testing. It has though deterred a lot of travelers, a lot of bookings. So where we thought. So we were hoping to open, let's say, the 1st of July. July was the month we had picked, but then we saw another wave of cancellations because of policy.
Yes, of course.
Good policy on one side of the fence, and from a safety point of view. However, it has ramifications. So
Understood. Kyle, I'm going to ask you to pause there for a second. I'm going to ask Tanya, please. Tanya, this story, I'm sure, is not surprising for you. It's very similar to the kind of thing that you can expect, right? So here we have a situation, a good business, a solid business, no question about that. Around since the 50s, recently doing very well, as recently as January, February, March, we had a very good season. We know projected that outside of a COVID situation, this is a solid venture. But it is moving into a time of uncertainty. Is it 6 months? Is it a year? Is it 2 years? Who knows? Not even Kyle knows. All kinds of things unexpected come. You are now his banker, let's just say, and you're having this conversation. And this is the story that he's laid out for you. How do you help him think about what can be done, and how does an NCB support or not support this effort? Maybe you say, boy, can't manage this one. Or you say, boy, there may be a way that we could. How do you help a business in the time of uncertainty?
Well, thanks for that. You know, this is unprecedented for all of us, and it doesn't really matter how much experience we've all had in banking and finance. Not one of us has seen this scenario before, and we're all sort of trying to figure it out as we go along. Fundamentally, though, you'd mentioned at the very beginning this matter that history doesn't really count. That was were not your words, but that was essentially it. I'm going to beg to disagree. History does count. It doesn't provide a guarantee, but it provides a basis, because what it says to me is that you're dealing with a scenario where you have a business which has been able to sustain themselves, because nobody has seen anything like this, but it doesn't mean we haven't had difficult times. And if you've been able to sustain yourself from the 50s and we're still profitable this year, it says a lot. It says a lot about your brand, and it says about, very importantly, it says a lot about your management capacity. Very, very important. Because what that says is that you understand your business, you're dealing with someone who understands their business, understands the fundamentals, understands their market. And that counts for a lot, because what we need to do, we, the bank, actually have to rely on the business to know their business better than we do. We can provide guidance and advice relative to how we operate, but fundamentally, we are funding your business, not ours. And so I really wanted to add on that now that the reality as well is that Jamaica Inn and some of the smaller properties, they're disadvantaged in some ways, but they are actually at an advantage in others, in the sense that there are some tourists who are going to feel safer once they get over the hump. And I appreciate the challenges of getting that first wave of customers coming in through the door. That's going to be the hardest part. I would suspect that that's going to be the hardest part. But Jamaica Inn is a business that has not only been in operations, but relies heavily on repeat customers, people who love the property, are used to the property. That sort of story counts for a lot when you're talking to the bank. Those things actually translate into solid performance over the course of years. So
what you're saying, Tanya, is that in a conversation with a hotelier like Kyle, you are very open to that kind of discussion and solution. I want to actually bring in Derek now. Derek, you know, your face is always hard to read. You've heard what Tanya has said. Tanya has disagreed with Nevada's position that history doesn't. In this specific case. And we love this kind of debate, because this is the kind of conversation we have to have as we build out the story. So Derek, when you've heard that story and you understand the history of a property such as a Jamaica Inn, from a JMMB perspective, what conversation are you going to either reach out to that kind of customer and have, or welcome with that customer? What's that conversation going to be in these uncertain times?
Right. Thank you for that. So I have to agree with Tanya that history does count for something, because track record is important when you're looking at credit, right? So a company that has a track record spanning back to the 50s, that's like 70 years. That's homegrown knowledge. That's, you know, a deep sense of knowing your business, and from what he's described, it's been with the family. So that means that there's been clear succession planning over the years as well. So those are some important factors. I mean, apart from numbers, you do need to assess the qualitative factors like history, track record, succession, management success. Because the fact that they've been around for so long is just a testament to how successful they've been as a management team. And all we could do as banks is try to leverage on that now and see how we could get them to take that next step that they want to take to boost their business even further. So I was very intrigued by that story. I've actually stayed in the hotel. I've come across it in reviews, so I know they have a good presence out there. So that for me would be a big factor as well.
So Derek,
yeah.
Derek, here's my question about structuring now. So
Right.
we understand the story and the history, as Tadia said, is critical. It's a good history. But he's going to go into 2 years of uncertainty, let's just say. How do you, and let's just say he doesn't have cash to fund himself for 2 years with the dribble of people that are going in early on. How do you structure something? Again, not in a specific way, but how do you structure something to help a business bridge this period? So, because he's been strong before, and both of you recognize that this kind of business will be strong again, management, everything. But this 2 year is where it's difficult. How do we think?
Right.
How do you talk to your client about that? This part of it, Derek.
Right. So for me, it's first of all understanding what the needs are over the next, let's call it 18 months to 2 years, right? So a business like this, I mean, we've seen most of the banks, including ourselves, come out with packages offering 3-month moratorium, 6-month moratorium. We have some other things that we do as well. That may not necessarily work for this client. So that's why we also look at other structures, such as what are your cash flow needs for this period? And once we understand the cash flow needs and we have some information, so I would probably look back at the history, see what their numbers look like, kind of project out 2 years to say, okay, if we return to a certain percentage of normalcy, what that could look like, and then what does he need to get him through that 2 year period? So we can structure facilities that are quite flexible, where you may not have to pay principal for that 2 year period. You could do a structure where interest alone could be paid, or interest could be, it could be structured in a way where interest is also accrued for a certain period of time, so that there's no immediate strain on cash flow. And maybe as you meet certain milestones, you start to build things in the structure where, you know, if you meet a certain milestone in occupancy, for example, we have the interest rate come into play. And after 2 years, when you get to a certain level of comfortable performance, maybe at that point, to term out the facility so do it for 2 years initially, light on cash flow requirement. And then at the end of 2 years, you could term out for a period of time that gives them a comfortable debt service payment that you can manage going forward. So there's a lot of flexibility, and you could even structure it so that you won't draw all at one time, because then that interest accrual will start to be heavy from the get-go. So you could structure facilities where maybe you draw down over time to manage your needs, one, and to also manage that interest expense. So I think we could look at different ways of structuring things. It's quite flexible. The fundamental principle is you need to understand what the client is working with in the interim, and where they see themselves with, so that we know how to craft that future.
Excellent. So, but bottom line, though, this is not a story that scares you in this time.
Yes, Rachel.
Yeah.
No.
Excellent. Go ahead, Rachel.
So, Tanya, you heard what Derek just described, and we like words like we're open to discussion, that there is some amount of flexibility, that we're going to look at the situation from the perspective of an NCB. You've heard what Derek has laid out. How would you be looking at a situation like this in terms of what support are you potentially able or willing to provide with such an SME?
Okay. All right. So, you know, we have certain tools that we can use. Fundamentally, you know, we need to have an understanding of what the need is. And, you know, you can't achieve anything without first understanding what the need is. Now, the concept here is trying to lend in uncertain times. So sometimes trying to define what that particular need is, there may be some difficulty. So the reality is that the business really needs to sit down and, you know, sort of, you know, pencil out what the various scenarios look like, you know, your best case, your worst case, and really be very clear on what it is that the expectations are, because that's what the bank really has to work with. Obviously, you have the conversations, and you might navigate an initial presentation. You might actually end up tweaking it, but fundamentally, we need to have an understanding of what that cash need is likely to look like. Now, one of the things that I will caveat anything that I say is that we are regulated. We operate in a regulated environment, so there are certain tools that we have available to us, but we also need to make sure that we are operating within the regulatory guidelines that are prescribed. So that is a given. So the matter of moratoriums and interest-only periods, those tend to be the most benign and simplified versions. And I believe in simple. You can come up with all sorts of complicated structures, and at the end of the day, the client doesn't understand it, and you really haven't achieved very much. Fundamentally, you need to try and keep it as simple as possible, keep it as clean as possible, and really what you're talking about here is we're not talking about profitability here. Right now in this environment, we're looking at cash flow. We're looking at your ability to sustain your operations, which means how much cash do you have to pay your expenses. And so really what it is, anything that we structure would be along the lines of trying to make sure that the right working capital support is in place in a manner which makes it the most affordable for the client. So that whole matter of drawing down in tranches, you really don't want, if your overall need over a 2-year period is $20 million, you certainly don't want to draw that $20 million up front, because it starts to clock interest from day one. So you really need to try to make sure that you're matching the need, matching the financing that you're providing with a specific need to ensure that the client has what they need with enough buffer to ensure that if things go a little off the rails, that they're also protected.
Kyle, what's your thoughts? You've heard from both sides as you think about your business situation. What's your thought?
I appreciate the road where you're taking us down, Nevada, and because and let me paint a picture for you as well. Even before COVID, and yes, we have been very fortunate over the last 60 years, but with the recent economic downturns, whether it was 9/11, we weathered the storm, but it's really a weathered the storm, 2008, etc., etc. One of the things in our business, and we're a little bit more fortunate because of our price point, and so I don't want to necessarily focus on our business, but more on the majority of our small properties and entities. The business is very cyclical, meaning that in the summer months, where we're going into now, most of our properties are actually not profitable, and so they are burning cash anyway, even before this, during the summer, and because the rates are lower, there's less visitors from North America or wherever else, other source markets, but generally the business is most aren't breaking even in the summer months, to be honest. So you're waiting for the shoulder season, October, November, December. Then the rates going up. You start making some profit. You generate a little bit more of a reserve of your cash flows, and that then helps to see you through come April, May next year, see you through that period again. Now, thankfully, we did, generally the industry and many of our members had a decent winter, so they've been able to cash flow wise, zero income, zero profit. So cash flow wise, last till now, many have had to lay off their team members and so on. A little bit of support, thank goodness, on the from the government with the set cash and set let's call it CARE, the CARE program with the set and the best. So it's also very important for our banking partners to understand, and as as we go to them with our balance sheet, well, P&Ls and our financials, to show that there is this cyclical move, and we're really we're really again gazing into the crystal ball, saying to ourselves, we hope we're going to make at least a decent amount of profit. Certainly not going to be anywhere near what it was last year. I think if we're 60% of where we were last year, we're doing well. No, whether that is enough to carry us through to the leaner months next year is another question. So there's going to be some other very hard decisions to make, and so we're going to be a really difficult situation, and we're not seeing, we're seeing the tip and sort of the maybe halfway down the iceberg now, but it's a huge possible issue in the future that we have to be prepared for, not just the immediate crisis that we find ourselves in. So the support and these, and again, yes, the moratoriums, these things do help, and I encourage the banks. I can tell you one thing, that the banks don't want to own a property in these times, so they're going to do all. Clients and we in Jamaica, we just can't afford that either. We need to make sure that the 150,000 employees in the industry, it is a symbiotic relationship. So we're looking forward to the support and understanding, and yes, we work together with you. And I'm happy to say that actually both JMMB, who looks after pension for our team members, and NCB are our bankers. So they know us well. They know the business well, based on our conversation. So they're a little bit more au fait with what I'm talking about now.
Yes.
That was great, Pam. Thank you.
I just want to add 2 quick points, if you can. So I think one of the things that I just want to point out is that one of the benefits for Jamaica Inn is that they have a good history, right? No, not every property has that, and that's actually something that it becomes very important to understand, that your history is going to matter in the conversation. It's not the general history of a sector by itself. You do have to have performance on your own. I think the other thing that I really do want to point out is that I think we all as Jamaicans appreciate that the tourism sector is so critical for the entire economy. It's not just the tourism sector is not limited to the tourism interest in the strictest sense. It really has a very direct impact on the rest of our economy. And there's none of us in this room that does not appreciate that to the fullest degree. And we understand that, we also don't believe that the government is unaware of this. And I believe that that the infrastructure and the way we move forward is going to very much take that into account.
Excellent. Thank you, everybody.
That's a really great point for this segment. Thank you all. Thank you very much, Kyle, for joining us. I think you gave us quite a bit to discuss. So what we've had, our viewers, we've had Kyle Mates, who's General Manager of Jamaica Inn Hotel, and he's given us our first case study. So we're looking at a viable business, a business that was very viable prior to COVID, a business with a strong history, and a business that on the face of it is expected to come back strong. What are those kinds of conversations? And we heard that the banks are willing to apply some amount of flexibility and some amount of innovation in the type of product offerings and tweakings for such a business. So some of you are saying, but I'm not hearing about my business. I'm in the restaurant business. And we have a lot of our viewers who are small businesses in the restaurant business. And we actually do have with us Mr. Gary L. Ferguson, who is someone who is well known to many of us. He's the owner and chef of Rib Cage and Grill. He's known as the go-to chef for flame-licking barbecue and jerk cuisine, and has been cooking since the age of 14. It's so long to cook, Gary.
Yes, very long time in the kitchen.
And he has represented Jamaica in various competitions, but has also run businesses overseas. So Gary, welcome to the show. I see Nevada is off screen. I'm going to ask Nevada to join us again for this segment.
Okay.
Gary, tell us a little bit about your Rib Cage story.
All right. Well, Rib Cage was established in 1995, actually. And that first run, because we took a little break and, to restructure. But when we opened in 1995, we actually had that operation going for about 17 years. And our experience back then was, of course, we depend a lot on banking partners, as it relates to credit card processing, checks, the usual banking business. The only thing that we found was that we didn't find that equitable partnership with the banks during that time. Fast forward to 2020 now. I mean, we're back, and it is still a little. It's better. It's much better, and I must say kudos to NCB, because they were actually one of the first banks that came up with a merchant loan. They looked at your credit card, because they realized that they had to find some kind of solution for small businesses, and this was way back in the late 90s, I would say. Because that is something that we have, benefited from. So, we are aware of it. But the problem that we have in the restaurant industry is that banks look at us as like high risk, very high risk. And, what I've found.
So while we get Gary back, we are having some power outage issues, and unfortunately, COVIDCast does not run the power company because we'd have some power. No, Nevada, based on some of the initial things that Gary has pointed out, because you've often said that the restaurant business is one of very cyclical, and it is one of the businesses. So Gary, thank you, because Nevada has actually previously made that point that banks are a little bit less willing to go into ventures with restaurants. Right. You have had lots of storms. You've gone through hurricanes, you've gone through recessions, and Rib Cage is back. Now we are in 2020 in COVID. And I know you have also thought and liaised with your fellow restaurateurs to come up with innovative new solutions for how together you can go through. Can you tell us a little bit about that?
All right. Well, taking into consideration that, we understand that restaurants internationally are considered high risk. And, we accept that, being in the business, we understand the attrition rate and, it's not favorable, right? But there's also the flip side that restaurants are very resilient in any disaster, all right? Recorded history. Restaurants are the ones that actually come back first. Right. So as we said, with history, with Jamaica as a property with a 50-year history, if you look at the restaurant industry on a whole, we're not that bad. We're not as bad as a lot of people think. And right now, based on the employment, the amount of employment that restaurants create in Jamaica. You have a lot of the fast foods who are really the leaders. They are the fastest growing segment in Jamaica right now, as far as any form of commercial activity. It is fast food. When you look at the revenue that we generate, it's phenomenal. We look at ourselves as a partner with the banks because they do process our cards. So what I decided to do was to get a group, a consortium of about 10 to 15 restaurateurs doing anywhere from $6 to $10 million in credit card sales per month. And we're going to come together, and then we're going to see how we can now approach financial institutions to say, well, hey, we're bringing $1 to $1.5 billion worth of credit card revenue to your operation. Decision makers, this is what we would like to do. The uptake for you would be anywhere from $30 to $45 million in just commissions, right? So we figure that if we do that strengthening numbers type of approach, then maybe the bank will kind of be more willing to kind of sit with us to say, okay, you know what? Because we are now actually bringing something to the table, right? Sometimes, a lot of times, you go in for a loan. The bank is, it's usually okay. Yeah, how can we help you? How can you help us? But our thing is that we're coming with something. We're coming up with $1.5 billion. Hopefully, if we can get that group together, it might be more. As more people, as we talk to more persons, they might want to come on board. But we want to do it. We want to do a long play with it. We want to get interim financing. We want to make sure that the person who earns $4 million a month in credit card sales and the guy who earns $20 million, I want them to be viewed the same way. I want them to be treated the same way. If we're going to be helping your bottom line as an institution, we expect to be treated well. This is what we do. We're in hospitality. That's what we have to do to get people to vote with their money. So we said we will come to the bank with our money.
Yeah. Well, that's interesting because we've been talking about creative lending. So Nevada, when you hear this whole concept of the consortium, so the restaurateurs going to the bank with this proposal, not just going and saying we need help, they're actually going with a proposal for how the help can look. When you hear that, as you're in the interim, as a liaison person, we call it Dr. SME, what kind of question would you ask the bank?
Well, here's the issue again, and certainly Tanya and Derek can help us about whether or not this kind of consortium approach is something that you have ever considered, whether in your current dispensation or Tanya with previous jobs, this kind of lending to a consortium based on the overall performance of the consortium. By the way, it has a little bit of a ring to it for me, almost like partner. I mean, obviously it's very different. But the whole idea of getting together a joint view of what the credit card business is, and based on that flows in part, because many of the needs are going to be the same. They're going to be buying very similarly, and in fact, buying as a consortium would also be very helpful. Over time, you may even have a situation where you co-locate, so a piece of real estate and stuff could be possible. But again, maybe Derek, start with you this time. As you hear this whole idea of a consortium of recognize that a single restaurant is a high risk situation, but a group of restaurants coming together with a higher source of revenue and sort of a minimum guaranteed credit card business, how does that strike you? Too weird, too crazy, worth a conversation? How does that strike you?
I guess for me, Nevada, I don't like to shoot down anything. So I'm always saying that, you need a conversation, right? To understand what the situation is. I mean, we don't yet play in the credit card space, but just thinking about it generally, coming together as a consortium and bringing something to the table is a good start. As you rightly said, the consortium type approach could help on the cost side for sure, because then you'll have the benefit of scale. On the lending side, it's something that I think I probably want to get some more information on how you think it would, because it would be separate borrowers. I mean, we want to understand the flows of each one of them. How would that work in terms of, is it separate loans? Is it that you're envisioning that this is going to be one umbrella loan? Because there's certain risk to that too, right? Because you may have one entity that do well in a certain period of time, and then would they then be picking up the slack for the others? So I think there's a benefit of bringing that group approach, and some of that scale will definitely have a benefit. But I think for me, I still need to understand and question a bit more how that would work on the borrowing side, because there might be some complications and risks that we need to consider, and how you'd want that structure. So for me, I think a bit more detail on that.
Okay. Before you answer that, Gary, just a second. Tanya, you are in the credit card business, and of course that is part of what you guys offer. How does this ring sound to you, sort of as a starting proposition?
All right, so Derek actually sort of highlighted one of the, when I first saw the scenario, one of the first things I said, the primary thing I need to have an understanding from the structure is how are the liabilities and the risks shared? Who is the responsible party? Because I need to know who I am contracting with. So, at the end of the day, if you have 15 people and you have 3 that are really good, 8 that are middling, and some of them who are very poor operators, lots of liabilities, lots of debt, etc., who is ultimately responsible? So it doesn't mean that the idea itself as a seed doesn't have some merit, but what it requires a lot of fleshing out and then building up. And I think that's something that, maybe a professional, taking that to a professional, so who is, in that sort of business in terms of corporate finance and structuring, may be able to put something together. But fundamentally, if you're putting that kind of consortium together, you need to understand that there's going to be a sharing of liability and sharing of risk that needs to take place for it to be able to happen.
Yeah.
Yeah.
What about the idea, for example, they're all going to be buying from the same suppliers, and maybe one of the things that they could agree on is that the financing could be to the supplier. So you take somebody who's a big supplier to restaurateurs, and based on a funding mechanism that is allocated to the supplier, these 15 restaurants are able to get more credit than they would normally would be able to do if they each individual just went to the supplier directly. Could the bank insert itself that way?
So you're talking about a scenario where you're really dealing with, not even the borrowers and the customers of the bank. You're talking about another party on the outside.
Yeah.
No, buying consortiums are not an unusual thing. Even within that, though, there has to be a very defined structure around who is doing what. I mean, who owns what, who is putting up capital. If you're talking about just negotiating pricing, then there has to be some arrangement and from the supplier side about, okay, well, what's the expectation about, who is ordering, how am I getting paid? All of those things would need to be fleshed out. Again, it doesn't mean the idea doesn't have merit. It just means that there's a lot of fleshing out that has to be done to be able to make it a bankable solution, to make it a bankable request. So I would actually suggest that that's something that can be taken and maybe just, maybe fleshed out a bit, and then potentially what can come to a bank, maybe a bankable solution.
Yeah, I agree with that fully. And so, for example, Nevada, for example, our SME Resource Center could be the place that would look at this. They would take them in, probably guide them to the right professionals to look at the consulting. The agreements between the place critical to need to get that properly documented. So I think that's a role for like a resource center.
A resource center.
So
just to understand, Derek, because I didn't know this actually. So the JMB Resource Center could actually help a consortium group to actually come up with a basic structuring that then they could possibly take to the bank. I mean, that works.
Our resource center could help by getting them started and pointing in the right direction.
Oh, excellent.
So they could refer them to any probably legal counsel that we have connections with. So the things like that, they could have an initial discussion, and then get referred in the right direction and help them along.
Okay.
But very fundamentally, any partnership, the agreements that govern that partnership become very, very important to the overall success of the venture. There are many a great idea that sort of fell by the wayside because it wasn't appropriately documented, and it creates more harm than the good it provided. So I think that's one of the words of caution that I'd put forward is good foundation idea, make sure that it's properly pulled together.
Okay.
Right. Yeah. Mm-hmm.
Gary, any thoughts, reactions on what?
Well, from the access to finance, right? We do expect that each individual would apply for what they need. It won't be jointly. It's not like we're going and say, all right, we have $1 billion worth of revenue. Can you lend us 200 million? The long play for us, right, is really developing the partnership with the bank. That's what we want to try and establish with bringing our credit card sales first and foremost. We look at that. So what we want to start the conversation, right? Then in that conversation, we want to see who is willing to take the ride with us to make this work, right? Whether it's the resources, whether it's the training, whatever it may be. We don't expect that we're going to take risks for each other, but do understand that we are 15 entrepreneurs, right? So a little risk taking is not out of the cards for us. Maybe we might look at it and say, look, this is what we need to do. We have some kind of escrow account that we actually keep money in that kind of is there to bolster, because it's strength in numbers. That is what we're really trying to do.
Absolutely.
We can put aside $15-20 million, you know what I mean? And that will get most of us through our rough times. So it's not, as I said, when these numbers, when you look at restaurant numbers in Nevada, right? Especially with some of these bigger restaurants, they're not normal. You understand? Right? So and there's a lot of wiggle room for them to do things. Because think about it. Most restaurant expansion in this country happens from their own pockets. Right? A few banks have come on board, right? But for the most part, restaurants are built out of owners' pockets, right? Private financing, whatever it may be. So, a lot of that happens, but we really need to get it to a point where restaurateurs can look at future. For example, if I went to someone and I went to a pension fund or NCB's pension fund, JMB's pension fund, right? And they said, you know what? The consortium would like to build a restaurant marketplace. The 15 of them would like to build a whole complex with 20 restaurants, right? Because they are now looking for ownership. They're looking for longevity. They're looking for some kind of legacy for their brands, right? And we move that forward, right? Then the banks will now have the real estate, the appreciating asset, right? That they can look at now to say, all right, you know what? We can hedge our bet against them based on the fact that we have an appreciating asset moving forward, right? We get into this thing 5-10 years down the line. We spent $1 billion. We're at $3 billion 5 years down the line. There's lots of plays that can happen, right? And our environment in Jamaica needs it, right? That is how good restaurants get to operate in this country, is to have safe environments, properly designed facilities. Yeah. That is where we'd like to go with it.
I think what you're speaking about here is a scenario where you have existing operations established with established cash flows. And those, we do have the preeminent product in the market that finances against credit card receivables. That is actually a very heavily utilized. It's a very heavily utilized product within our SME portfolio. It really is our SMEs who utilize that funding source because it is convenient. And it is really basing it on your credit card flows, which are clearly evidenced in the settlements. So what you're talking about is a scenario where you have a foundation to build from. And then once you're building out a plan that is, as you call it, as we would say, it's bankable, and you can clearly establish that you're talking about businesses that are already established, then it's about making sure that it's properly laid out. And the reality is that those things are doable. Yes, restaurants have challenges. And I think anybody you've been in the restaurant business, we've seen the restaurant business from the other side. And there are challenges with the restaurant industry. However, there are many that, as you said, have been around for many, many years. And some of them are very profitable and have done very well over a very long period of time. So it's not as if it's not as if there is no precedent for strong operations in the industry. It's just to make sure that the structures are there to ensure the sustainability, and it being able to make sure that that is made clear in any submissions.
Yeah.
Thank you.
Tanya. I think we are actually coming to the end of our segment. Gary, you gave us some strong points earlier. The restaurants are very important to Jamaica. You are a major employer, and many restaurants have actually been funded by the owners. So is this a new day? Is this a new time? Tanya has talked to us about the bankability of the restaurants, and in putting together something like a consortium, what are the various considerations you would have to have as the group comes together? So I'm going to actually have Derek have the final word in this segment. Tanya, thank you for your last points and on the bankability and looking at that overall picture and the story. Derek, from the JMMB perspective, what last words would you have on this particular area?
Yeah, so I mean, I agree with what Tanya would have shared as well. As we said, how it's structured and laid out is essential. But I think you have a base, you have ideas, you have the volume that you could bring to the table. I think what it needs now is somebody to work it through, come up with a proper plan, generate that cash flow outlook, etc. that the council will need. Because at the end of the day, we'd want to see how the debt is going to be serviced. But we're here to try and help you do that as well. So make uses of resources like myself to try and get that kind of support that would help you get the right thing.
Yeah.
Thank you very much. Gary, thank you so much for joining us. For our viewers, we've been getting a lot of comments about Ribcage, how well you are set up with your COVID protocols, your delivery, how fantastic your meals are. For those of you who don't know, Ribcage can be found on Instagram and they're located at Sovereign North. Please support our small businesses. Thank you very much, Gary, for managing director and chef extraordinaire of the Ribcage Grill. Tanya Allgrove, Assistant General Manager of SME Business at the National Commercial Bank. Tanya, we love you, so we're going to bring you back on soon. Again, thank you for all the points that you have made. I think you have really given some interesting input for our SMEs to consider as they're approaching the bank, and the openness of your organization to have those conversations. Derek, great to have you, Chief Risk Officer, JMMB Group. Derek mentioned the JMMB's SME Resource Center. They can be also found online. Please ask the questions. And we're really grateful that our bankers could join us. Remember, we're saying, go to your bankers, ask the questions. We provided you with the guidelines, but where you're able to come up with innovative solutions yourself, take them to your bankers. Thank you very much, Tanya and Derek. And we'll see you again soon. Nevada. Nevada, what great conversation. You're on mute.
Indeed. Yeah, we had some technical issues, but lot of very good
programs. We pivoted. Yes, so we have some technical issues and we did an operational pivot.
Absolutely. Interesting times, right? And it's going to get more interesting, as I keep saying every week, and trying to figure out how we ensure that which were good businesses before COVID are able to navigate the next 2 years so that they survive after COVID. Because if we lose them, the economy will take much, much longer to come back. Remember, we want businesses that are ready to spring into action the moment we have a vaccine. And if we don't find a way to preserve them, now Tanya made a very good point. It's not just the banks, it's also the ones who make the regulations to allow the banks to operate. So this whole idea of having an economic recovery group that involves private sector, public sector, regulators, everybody coming together and making sure that the thing navigates appropriately to a winning Jamaican recovery is really, really crucial. We cannot be operating in silos and make the right decision. Because remember, Jamaican economy has got to recover. And if everybody's just thinking in terms of silos, we're going to miss the bigger picture. So my big push is any business that was viable and successful before COVID and would be viable and successful after COVID, we have to find a way to bridge them through the period. I'm not saying it's the banks alone. There's skills that's needed, training that's needed, regulation that's needed, public resources that's needed, and the public, us supporting these restaurants and other entities is also
exactly
crucial. You know, many of us not taking a trip abroad this year because we're not ready to get on a plane, but maybe we go support some of our small hotels.
Exactly.
You know, to make sure that they're able to bridge this period. We know they're open but not profitable. Let's try and get them some cash to pay some of those people, to pay some of the things. But fantastic, really, really, and opening the mind about what actually is possible and might actually happen. So good discussion,
Yeah.
Rochelle.
Yeah, and I think one of the things that tonight's discussion, we started out COVIDcast talking about the whole concept of pivoting. And that pivoting is not just about the business. It's in fact an economical and mindset pivot that is necessary, because a lot of collaboration is going to be necessary for this economy to move forward. So it's the government, the regulators, the business owners, but we too as customers have to be supporting the businesses. So it is really that economic pivot that we talk about, this growing Jamaica. We're doing this for our nation because, as we mentioned at the outset, our SMEs are an essential economic driver. They help with our gross domestic product. Our SMEs are major employers of our people. We have to come together to ensure they survive. So thank you, our viewers, for joining us for part 2 of Lending in an Uncertain Environment. With me again is Nevada Powell, lead architect for the PSOJ SME project. If you did not receive last week's memo, which also we moved into this week, please email us at sme@psoj.org. sme@psoj.org. For our viewers that are just joining us that are wondering, so what happened to from 4 o'clock? Because we're looking for you from 4 o'clock. Remember, this is our new time for COVIDCASTJA. We are now at 7:30 p.m. right here every week. And you can always go back to watch our past episodes. And again, please subscribe for our memo. Nevada, very interesting conversation and such a major topic. I don't normally give you another last word, but I'm going to give you a next last word. What is that last point that you want to leave with our viewers?
Lending in an uncertain environment is a conversation that we're going to keep having to come back to again and again. Not only on COVIDcast, we need to keep having this conversation nationwide and talking about it. This is one of the crucial things on which much of our recovery depends. We are living through the uncertainty. Some of us have a clear way of surviving and them good, but most of the entities are going to need guidance and funding through the trough. The uncertainty is with us for a while. And every time we put down a business plan, we have to say, and if the revenue is half, and if they close the border again, and if the COVID numbers go up. All planning needs to contextualize with that knowledge, right? We see what's happening in Florida, restaurants, hotels, everything. There's no reason to not assume that we too won't have those kinds of stop and start. What we call it, the jugo economy. We need to scenario plan for the jugo economy, because that is where we are, and have to come together to make sure we navigate this appropriately so that we don't hit ourselves in 2 years saying woulda, coulda, shoulda with a bunch of dead businesses that we didn't think through.
Yeah, thank you for that, Nevada. And for our viewers who are joining us from overseas who are not quite certain what a jugo economy is, we're talking about a start-stop economy that is a stark reality in these uncertain times. So it's a constant scenario planning. We look forward to seeing you again next week at 7:30 our new time for COVIDcast JA. Thank you all, and thank you, Nevada. Walk good.
Oh, good. Oh, good.